What's going on, cryptocurrency universe? It's the Bitcoin miner here, guys. And boy, do we have a sea of red today. It does not look very good. Could very well be the start of I don't dare say the word crypto winter, but stay tuned, guys. I actually think we may not see a crypto winter this cycle. I do think we may see a down cycle, and this is exactly what we're in right now. But we may see what I would consider a super cycle, and I'll explain that later, so stay tuned. But let's just take a quick look at the market, guys. Bitcoin is down 18% for the last 7 days. Ethereum is down almost 27% for the last 7 days. So, the question in my mind and a lot of my colleagues, friends, and family has been, how low can it go? Is this the bottom? Where is the possible bottom? What do you see? And again, I'm not a financial advisor, guys. I am just a guy in the garage that likes cryptocurrency mining and loves the way this stuff works. And I just kind of piece the puzzles together by putting together the different applications or the way that they function and affect each other. Everything has a cause and effect. So I like to look at Bitcoin mining as a profitability to get an idea of how cheap Bitcoin can go. So let's go over here and let's go over to what to mine. This is whattomine.com. We're going to take a quick look at the miners up here at the top. And the miners are going to give us the latest miners that are available. So what we're going to do is focus on Bitcoin right now. And what we're going to look for are the S19 Pros and so forth, which are right in this range in the 1 terahash. So these are going to be your most common ANT miners along with the 96 terahash ones. So let's take a look at the 96 terahash one. It makes 16. Let's go up here and check our power cost. 10 cents. Now, farms that Bitcoin, large miners are going to control the market is my perspective. At least until the next halving. And I believe their power gets weaker and weaker as the supply or the mining amount comes out, gets less and less. But most farms are going to easily be at the 6 cents range. So let's just go ahead and put 6 cents in here. They could even be as low as 4 cents. The ideal price point from a miner perspective would be about 4 cents. So it can be even lower than this, but we'll go with 6 cents as an average. And let's go find those miners again. Here you go. Here's the 110 terahash, the latest one, 100 terahash, and 96 terahash. We're looking at these guys making around $18 a day, $16 a day, $16 a day before power. After power, they make relatively about the same. $12 a day here, and we're all about $12 a day. So now let's go back in history a little bit and think about where the Bitcoin, how profitable the latest miners were at the time during the last, say, crash, and then let's say look at the profitability of what they were during the last peak. So I put out this video in 2017 saying that Bitcoin could be worth $60,000 in 2021 or 2022/2021. And, obviously I used this method to determine how I got to that price. So stay tuned, guys, and we'll kind of walk you through this. That video will go into very well depth on exactly how I did that. And I'm probably just going to skim on the surface in this video and help explain where I see this going. So I believe that we could get easily as low as $5 per machine in profitability before miners are going to want to hold. Maybe even $4 a machine before they're going to want to hold and just wait and maybe start borrowing against it to pay their power bills until we see the next cycle. Because now what we've got to look at is we're about 2 years out from the next halving. Remember I mentioned super cycle earlier. And what I mean by a super cycle is we have normally the bull cycle only lasts about 300 days from the halving. So our bull cycle should have been over as early as maybe October of last year, but it didn't. And we continued all the way into January of this year, and we're still technically in the bull market, although we're on the cusp of it being over. So we're now about 2 years out from the next halving. As you know or may not know, hype starts to build about a year out from the next halving. So we only have to make it 1 year in this down cycle before hype for the halving starts building. So this is what I mean by a super cycle. It's going to be a snowball effect. We already know we have a lot of stuff coming out this year and a lot of different things, and large miners are following this stuff, a lot of infrastructure being built. So they're going to borrow against the Bitcoin that they're mining. They're not going to sell it, and they're going to wait for a better opportunity. And the question is what price point will they do that at? Now, in my personal opinion, in the last bear market, it could be as low as $4 or $5. We saw these machines making $50, $60, $80 a day at certain times, especially when we had the difficulty drop. We had a massive difficulty drop, and this was an unforeseen circumstance due to China kicking out all of the miners there. So this was a huge drop, and we finally have gotten back to where we are. So we're going to talk about that towards the end of the video a little more, and pricing and how I believe this affected the price. Because, again, the miners control the market more than I think people realize. And that power does dwindle as we have more and more halvings. But they get a large amount of the supply, and they have a large amount of cost basis that they need to liquidate for it. They're not buying and holding, or it's not necessarily an investment for them. They're in it for the hardware as an investment and going through the cycle. Now, with that said, now let's go take a look at how low Bitcoin can really go. Because we're at 35,000 right now, and we're still making decent money. I mean, $13 a day if you're a large farm. So let's play with this calculator a little bit, and let's go ahead and just pick the 96 terahash, because I think that's going to be a more common one. And we need to adjust the price. So we need to go over here to BTC value, disable that, and we're going to go ahead and put 32,000 in here. Calculate. We're still at making $10 a day per rig. Let's go with $30. We're still at $9 a day. I'm not saying it's going to go this low. I'm just trying to show you how profitable it is at the current difficulty rate. Our difficulty should technically be up in here, but because of this huge dip, we're going through a recovery period. And I believe that is having a lot to do with what we're seeing right now. So they're going to correlate more than most people are going to understand. But in this current cycle, let's go ahead and put 25,000 in. We're at $7.40. In my personal opinion, I don't think we would go below 25,000. I don't see miners selling much below that point. It's just not necessarily going to be extremely profitable for them, especially for people that are not getting 6-cent power. I mean, let's up the power cost to 8. And you're at $6 a day. And not everywhere is going to get this. I mean, only certain regions are going to get 6 cents. And only certain regions are going to get 4 cents. I would say the global average is probably going to be even closer to 10 cents than 6 cents. So you're at $5 a day at 10 cents. So the answer to the question for this key video is about 25,000. I really don't think it's going to go below 30. I think 30 is going to be more of the mental block for most people, especially when you start looking at some of these large buyers, like MicroStrategies. Their average, I think, was 29,000. So, you know, I just think it's going to stay within this range. So I wouldn't be too worried. It's not going to 10,000. I don't see it in my personal opinion. I just think that the miners, again, will start borrowing and holding or doing other things, then liquidating the Bitcoin once we get to this point, knowing that the halving is just 2 years out and that hype will start building within a year. So they only have a year to strategize and plan. And this is what I mean by a super cycle, ladies and gentlemen. This could get very, very interesting. Now, this is Bitcoin. We have another dominator in the market these days, Ethereum. Let's go take a look at Ethereum's chart as well. Ethereum now is right at 24,000, down 26%. Let's look at the profitability of Ethereum. You can use the same metrics to help give you an idea. We're looking at a $2,000 graphics card making $3.29. Excuse me, $3.39. Let's go with more of an average card most people are going to have in their mining rigs, and it's probably going to be somewhere around in... Oh, they have the A4000s in here. Oh, they added those. Nice. I would like to say the A4000s are going to be probably one of the best ones for Ethereum coming out. Somewhere in this range. So we're looking at between a $2 and $3 per card. Your rig could... Most rigs are going to have 6 to 8 cards. So you're still looking at making roughly $20 a day on Ethereum. Let's go take a look at that. So this is a single card. So that single card is... Yeah, you would get about almost just under 550 mega hashes. Let's go ahead and put 550 in. And you're making $18 a day. Ethereum has a way to go. I mean, it's still extremely profitable. I would almost think $5 a day possible for Ethereum. But you have to remember, Ethereum's going to follow BTC price too. So let's go and change this down to 25,000. $13 a day. And again, we went with a very expensive card. So this is like a $1,000 a card rig. So you're looking at maybe an $8,000 rig if you got it at retail. I think we need to lower the exchange rate because I feel like this is going to drop. .005. See, it can go a little bit lower. So if you guys see what I'm doing, I'm playing with the exchange rate and I'm slightly lowering it, and I'm watching the day price, which is right here, $9 a day. So Ethereum has quite a ways to fall. I mean, I'm not sure what this is for Bitcoin price. We'll have to figure that out really quick. $1,700 for one Ethereum. Okay, so guys, I'm finding this out live with you really quickly. I'm sorry it's kind of dragging on a little bit, but about $1,500 is where I see Ethereum possibly going in this lull. And I don't think we're going to see a crypto winter. I don't think it's going to get down to $1 per rig like we saw $2 per rig in the last crypto winter. I think it's going to get in the modest range, the $5 range per rig if we're talking about a 6-card rig. So Ethereum could see as low as $1,500 this cycle, and then Bitcoin could see as low as $25,000. I would like to think we're not going to get below 30 for Bitcoin, and I'd like to think we're not going to get below 18 for Ethereum. But you guys can see how I'm using the profitability of the miners to judge where the price is going to go. And you can see how lucrative it might be at one point for the miners, and where the miners might want to change their mind and say, oh, it's time to huddle down and hold. And these things have perceptions on the market. And of course, there's large traders and a lot of other variables to account for. But mining is a very big variable, as we just proven with this dip here. It became very profitable once that happened. So guys, I encourage you to go check out my latest prediction video. I'll put a link down in the description for this. I do believe I used the same basic metrics, using difficulty, using price, using profitability, and where do I think the price could be. Now, when I did this video, I did not know about the difficulty huge drop here because of all the miners getting kicked out of China. So that drastically could affect my overall perception. I may actually be wrong, where I was dead accurate on this video here. And I'll put a link to this video as well in the description. This is the one I did earlier. This one very much explains over 21 minutes exactly how I'm correlating the two. I covered it briefly in this video as well. And you guys can use this information for yourself to help understand where and what you think Bitcoin might do in a medium term to long term perspective. Thanks again, guys. I appreciate you watching. Hang in there. What goes down will come up. I know it's the reverse aspect. What goes up must come down. But in Bitcoin, you have to remember, in cryptocurrencies, it's generally deflationary. So it will generally trend up, especially Bitcoin. Ethereum does not have a cap, although with the latest EIP 59, it has become a deflationary currency. We will see if that holds. Be careful of other currencies which are not deflationary currencies, guys. That is something to understand. What is their cap? How is there a cap and stuff like that? So all this stuff is focused mainly on Bitcoin. All right, thanks again for watching. Talk to you guys soon. See ya.